As you can see this chart here, you have bonds like U.S. Treasuries, and then you have stocks, something that's called equities. Because the economy was stalling, they had to start dropping bond yields. So my numbers are probably off because I don't really like bonds. But let's say back when I was getting into the workforce, you could get 16% on a bond. So if you put $1 million or 100,000, whatever it was, you got 16% on your money. But as the economy slowed, they kept dropping the bond prices. They wanted to drop debt, make it cheaper. Then what happened is that the stock prices higher. So that's macro. That's the relationship between bond prices coming down and stock prices going up. So after 2008, what they call the GFC, the Great Financial Reset or whatever they call it, they had to keep dropping bond prices lower and lower and lower, and it got near zero. So they call it zero bound. So in some countries in Europe, if you have $1 million, you put it in a bank, they charge you money there's no interest in it. So that's why Rich Dad, Poor Dad came out in 1997. I said, savers are losers. The reason I said that was interest rates on your savings was going down. And they were printing more and more money on the macro level. And what happened is then these companies like the Fortune 500, they were borrowing cheap money to prop up their stocks. So they were buying back their stocks, which sent the stock price higher. So today, this is April 2021. The stock market is at an all-time high. Bond prices are about, I think the 10 years about 1.5%, so it came up just a little bit. This affects the whole economy. When I was a kid, only gamblers were in the stock market. You can just Jim Records, who wrote Currency Wars and all that. He says Jim and I are about the same vintage. The only people that were in stock market were gamblers. Everybody else, back in my times in the 60s and 70s, were in bonds because they were really safe. The problem is if the bond prices go up again because they got too much inflation. It's either going to inflation or deflation. We don't know. But let's say they raise the bond price, stock market crashes because the companies like Ford Motor Company, IBM, and those guys, the price of their debt goes higher. They're so deeply in debt because they've been borrowing from, let's say, IBM's treasury, and they've been buying back their stocks so their executives can parachute out with stock options. So the CEOs and the executives of these major corporations in America have been screwing everybody because they were borrowing money from the company to buy back the shares of their stock because the price of money was so cheap. But it drove the stock market to all-time high. So today, of the S&P 500, 100 or 20% of the S&P 500 are zombies. In other words, their debt is so high because their stock price is high, but they kept borrowing money to prop up the stock market. So let's say they raise the bond price. Okay, so let's say they go from 1.5% to 3%. 100 companies crash. Of the Fortune 500, they crash because they can't make enough money to pay off the debt they borrowed. So their CEOs and executive vice presidents and all the investors can parachute out. The stock people who invest in the stock market. That's why I don't own any stocks, because I'm an entrepreneur. I don't need to buy stocks because I can create my own assets. I create my own companies. I invest in private companies. These are public companies. So the reason I sit around and yak about gold, silver, crypto, Bitcoin, Ethereum, and all that is I simply don't trust the money markets or the stock market or the central bank. So if we could go into gold, silver, and crypto, the question is, why hasn't gold gone up? Who knows where it's going to go? So I thought gold would be like $2,500 today, but it's $1,700. And the reason is when it goes to the bond price went up, the price of gold came down. So they're all related, and nobody has an answer, but you got to pay attention to that. The price of gold didn't go up, One reason is because crypto is, Bitcoin is sucking the air out of gold and silver. So two things are affecting the price of gold. One is interest rates went up and Bitcoin came in, Ethereum and all those other things. Which brings to my real rant is the thing I'm really upset about is I'm talking to one of these young, what they call them, hodlers or something, this young guy who now he thinks he's Donald Trump of crypto or something. And so when Bitcoin dropped from, I think it was 65 down to 50 per coin, I bought more. And this Donald Trump of crypto is probably 22 years old, says, you made a mistake. You should have bought this. You should have bought that. You should have bought this. I had no idea what the guy was talking. He says, Bitcoin's old. It's going to. The kid's a gambler. Not that I'm not gambling in crypto. I am not gambling in gold and silver. I've started gold mines and I've started silver mines. But let me explain this. The reason I'm in Bitcoin is because it's the most established. It already has a network. It's got a head start on everybody. So this guy is now, won't touch Bitcoin because he's chasing the next hot thing. What else is going on? There's NFTs or something?
Oh, the non-fungible trades or tokens. Sorry. Yeah. But those are all just driven by hype and speculation. Yeah.
Yeah. And so gold goes down and all you Bitcoin yodelers out there or hodlers, but all these young guys got their heads up their asses. That's the problem. They're not old like me and they don't have all the scars on their back to see the stupidity. They don't even know what the sock puppet was.
You know what I think is funny is that so a lot of people accuse you, oh, you're old school because you're a gold guy. But there's a generation now, these 22-year-olds, who thinks Bitcoin's old school.
Yeah.
Isn't that how fast that technology moved, that mindset? Yeah.
And that's what happens, no basic financial education. Whether you're old or young, if you're stupid, you're stupid. I mean, just don't worry about it. The market will take care of you. So when I told this guy I bought Bitcoin when it dropped from 65 to 50, he says it's going to go to $5. I said, it might. The difference is I can afford to lose that money. But that's called, I'm speculating. In my world as a professional investor, I'm in the acquisition phase. I'm taking a position. I've taken a position in Bitcoin and Ethereum. Every time it looks like it's getting a little cheaper, I'll buy it. So I saw Bitcoin at 20,000, I think it was, and it dropped to 7 and I waited, and when it came to 9, I bought. So today, let's say it's 50. I'm still in the money. And if it goes to 40, I'm gonna buy more. Now, could I be wrong? Absolutely. Could some hodler coin take off? Yeah. Could there be another pets.com of crypto? Absolutely. But the difference is I'm in the acquisition. I've taken a position. I took a position in silver and gold. I have millions, not in this country. But I don't have any paper. I don't have any ETFs. I only take the real stuff. Because as I said, the Perth Mint can't deliver on silver. If a mint can't deliver on silver, who do you trust? And so with all of these young kids coming up going to invent the next Bitcoin, I don't doubt they will. I don't doubt one of those 10,000 new crypto may blow Bitcoin and Ethereum out of the water. And if that happens, I'll make my switch. But until then, I'm like I was with gold and silver. I'm in acquisition. I've taken a position. When I sell, it's called distribution. But there's one big difference between Bitcoin and Ethereum and real estate. Bitcoin and Ethereum are liquid. Means I can get out. If I realize that there's a new NFC, what do they call them, or a new guy's going to take out Bitcoin, I can get out. But with real estate, the trouble with real estate, if it goes down, you're the skipper of the Titanic. You're going to ride that baby all the way down. So real estate is not liquid. The reason I didn't buy the new hot coin is because I'd rather stick with the old coin called Bitcoin and Ethereum, because I'm an old guy and I like the fact that it's such a good, solid, more and more people are coming into Bitcoin. So could it be in a bubble? Yes. Can it go lower? Yes. But I don't chase the hot new thing.